we got Alex here from Pendulum. We'll dive into some topics such as cross-border payments and how crypto is kind of disrupting that.
We're connecting directly fiat to the fiat networks out there through stablecoins. Just imagine 2014, a company named Satoshi Pay in Germany and the UK wanted to have a bank account. It's impossible, right? So blockchain was, in the eyes of traditional finance, it was somewhere always near criminal, organized crime and drugs and so on. So it had a very bad image. Now it got better. Fortunately, it was put in place more and more.
Try explaining to your auditor, that's just the Shiba Pups Obama Sonic Inu coin that was transferred to us, and we swapped it to USD. It's all good. It's all
yeah, exactly.
All right, thank you for tuning into another episode of the Teach Me DeFi podcast. Just to say it real quick, if you enjoy this episode that we're about to do, if you learn something, please consider to follow or subscribe and share this episode. That helps us a lot. It helps us to reach more people, and it would mean the world to us. Today, we got Alex here from Pendulum. Hi, mate. Thank you for being here.
Hey, thanks for having me. Great to be here.
Yeah, it's great to have you on the show. And I think we'll dive into some topics such as cross-border payments and things like that, and how crypto is kind of disrupting that and making things more efficient. So excited to dive into it. Can you perhaps give a little intro about Pendulum, the project? How did it come about, and what's sort of the mission of it?
Yes, sure. And so Pendulum is not the first project, let's say, of Satoshi Pay and the Satoshi Pay team also that has built products since 2014 now on chain. So we started actually building mass user use cases initially on Bitcoin. Actually, then we focused on payments integrated with the Stellar blockchain, and then we moved to Polkadot for smart contracts. So what we're trying to achieve with Pendulum is connecting fiat and DeFi ecosystems so that, let's say, dApps or projects can actually easier acquire new users, that you have a platform and infrastructure where you can run payments with, right? So you can optimize the payment infrastructure. We're disrupting also the cross-border payment infrastructure with Pendulum. But the major objective is always to build something that can be used not only by some blockchain experts, but by actually a standard user and the mass user audience. So that's what we're trying to achieve. And that's what we also are in good progress right now building with Pendulum.
That's awesome. Cool. So you actually started, a while ago.
Yes.
And then you moved on to Stellar, familiar project as well, and of course Polkadot. What's kind of wrong with the payments, cross-border international payments infrastructure? I know we talk about payments a lot in crypto, but I'd be curious to hear your take specifically on this.
Definitely. So I think payments was already like one of the initial use cases also. It's like cross-border payments of Bitcoin. So it was like the first thing when you interact globally together, like from one continent to the other. Can I pay with Bitcoin or something? And then you just send Bitcoin over and it's there, right? Doesn't matter if you are in the same country, in the same city, or if you're in a different time zone or country or banking system, right? So that's how easy it was initially. And of course, there was a little bit of user experience friction. How do you get Bitcoin and then to pay with and so on? So that was the hassle. But it was already like the initial use case that already got a lot of traction already initially with Bitcoin. The hassle and problems in the, let's say, traditional finance is that if you want to send money like from one country to another, you have different currencies. You also have different banks involved. So it's not that the bank is sending the money directly to the recipient bank in, I don't know, Canada or somewhere in Australia or somewhere from here or to Mexico. So it always has more hops than that. So it's working that these banks have then contracts with other banks that sending the money there, doing also a currency exchange, maybe with another bank involved, right? And then at the end, through these different hops and intermediaries, the money at the end then is in the recipient country, and then the recipient can actually access it. And also, when these banks work together, so they have a couple of problems working together because they have also systems that are not really interoperable. I mean, there is a standard for information exchange, yes, but all kinds of like risk management you have to take, because if you want to work together with another bank from another country, that implies a lot of complexity. Like, how can you trust that bank, right? Because you have to trust their ledger that they have, right? You have to trust them that they have, let's say, $1 million or two in their accounts, right? And then how valid is that? What are the risks involved? So it's a huge overhead actually for a bank to work together to find out all these risks, to assess them, right? Put maybe, like, I think 2/3 of the transactions at currency exchanges are also secured. Like, there's an insurance paid for these risks if some banks, so if one intermediary actually stops business at one point, right? So that's a big hassle. And then the user sees it on the user side of things, sees it that it takes long. Sometimes payments get stuck. Sometimes it's not known where the money actually is, right? On this way, could be stuck at like the third stop because there's some extra check required, and then the whole line of communication goes back, requiring some extra documentation or something, and then the payment takes maybe 4 weeks or something, right? So there are these delays happening, errors happening. There's sometimes very manual work involved that can only happen at business hours, and at the end, this, let's say, causes costs that you have to pay somehow, right, as a user. So all these administrators of all these local software systems need to do their job, right? So that's very costly, and that's the bill you pay at the end. Also, it's very intransparent sometimes. What is the currency exchange rate actually for you, right? You're sending the money to a different country, and then you actually don't know for sure, like, how much will arrive or what the rate will be, and it's a lot of problems involved because you have these not really 100% interoperable systems in the traditional financial world. And it takes a while to synchronize that, right? We did that in the Eurozone, and there are things improving, and we have also some disruptors in the traditional financial space that are solving some of the problems, right? TransferWise, now Wise.com, right? So they already have some solutions, and it gets better. Still, they have to work in that environment, right? So in the traditional financial environment, that has additional complexity, costs, and a small error problem there. So there is more stuff, let's say, more intermediaries, like, cause more complexity and costs and time at the end.
Right. Yeah, I think everyone that's kind of done any sort of cross-border payments privately even, and I think especially if you've done it professionally as well, there can be like unforeseen complications and headaches.
Yes.
In this whole thing.
I mean, we might sit in Europe right now, right, and things work maybe fine, and even if you transfer money from Europe to US, I mean, we had we talked to some business clients 3 years ago already, but also recently, that still have problems even in these areas where payments take a week or are expensive, right? So it's still not solved on that side. But then we also did a lot of interviews, for example, in Mexico, in Brazil, like in other countries. And then if you want to send money from Mexico to Brazil, actually, or the other way around, then it's not like 1 week, or it's actually more complex. Also, not all the businesses are connected to SWIFT, so to international, let's say, money transfer standards, or the banks don't usually have that, or that's restricted to certain companies with, I don't know, a big balance sheet or something, right? So not everyone can actually use that system also. Right. And then sometimes transfer from Mexico to Brazil will get stuck with a US bank, right? So sometimes then 2 weeks gone, money hasn't arrived, people are getting on the phones, and then they learn that some US banks requiring some additional information, and to unlock that money is again an overhead and so on. So if you talk about emerging markets and then also sending money from emerging market to emerging market, the problems amplify there, right, on this journey.
You also mentioned the transparency. Does this sort of like tie into this thing? I don't remember the English word for it, but I think it was something like a three ledger system. Like you mentioned, you have the sender of some money. He's got his own internal ledger. Then the recipient company has their own, and then to have like in the middle, sort of like this transparent layer, which is, for example, a crypto network or Bitcoin or whatever, where you have like where you really have truth that settles what the state of affairs are.
Yeah, I mean, exactly. So if you have, like, let's say, more of this journey on chain, right, than on the public blockchain, then you have this transparent, auditable, like everyone can see also the rates. You don't have much risk to manipulation also of some rates. There were some scandals also in the back end. Also, you have more security if you transact on chain, right? Because transacting off chain, as you mentioned, is always like, you always need trust with this, right? Or you need insurance for this, because if you send money, someone needs to send the money first. If you do a currency exchange, right, you cannot send it in one transaction. Just when you swap on a centralized exchange, right? Yeah, someone sends first, then they receive the other currency back. Something. So we always have these kind of problems, and then usually the settlement happens maybe a day after, where these ledgers are then all balanced out and so on. It's big overhead. And on chain, you usually settle instantly, right, with the next block, right? So, and you actually are sending the assets, right, the liquidity. There's not just a ledger update, but the ledger update actually transfers the asset from place A to B. Yeah, it works much easier and much simpler, right? And if you put these things on chain, but of course there were also some problems coming with that, right? It's not just a system that works only better. Right? You had some UX challenges initially with that, as I mentioned, for Bitcoin initially, and availability, accessibility. So these are all challenges that, I mean, got solved more and more, and I think we're on the edge of solving them, so that even let's say my mother or parent generation can easily use these payment methods that are running on crypto rails, right?
Right. And I'm curious to get into that, but perhaps before we do, you mentioned TransferWise or Wise, for example, right? Because we just talked about it. Obviously, the cross-border payments, you have these opaque trust structures that you have to trust. You don't understand what's going on, can get stuck, whatever. Things can be out of sync, out of balance, and it can cause big delays. And also there's fees, right, that can be large. So the next thing I'd be curious about is, so what is like Wise doing in all of this? Like, I've used them before, and it is relatively fast now. I think when I was setting it up, I think the first time it wasn't fast or something. I'm not sure, but can you just talk about that model then, and perhaps the pros and cons you've seen there?
Yes. So Wise they're nice, like great players. I mean, disrupting that space already and making it much easier for the user, and also more transparent in the traditional world, right? Which is great, and was a great journey also to follow. And they could reduce also fees, increase time. They did that by, let's say, holding liquidity in various countries in the world, right? So they were not dependent on some like players and all these intermediaries in between. They didn't go the classic way. They kind of jumped that in the specific country. So if they are offering a corridor, then they would more or less try to have one contract with an entity there, or have their own entity in the recipient country. So and then hold liquidity on both sides, and then they can just let's say manage their own ledgers, right? And rebalance them later. So they already cleared out some intermediaries on that journey, and that's, I think, working great. I think they're having various solutions right now. I think there's not one solution for all corridors, right? So they have a vast network somewhere now, connecting everything somewhere in the traditional world. I think they don't work with crypto there. We also, I think, try to contact like various traditional financial players in the past, and some really say, no, we can't, we don't. Because also their partners would not allow them to touch crypto, right? It's just like it has still with some big players. It has still an image that you do not touch that, right? Or it has just too many compliance challenges for big banks to work with, right? It's something that's strategically ruled out for some players still. So. And what Wise did is optimizing the different liquidities, working with partners. There's also, I think, Currency Cloud is optimizing a lot on that, and the back end of some banks and fintech players, right? Offering them certain corridors they don't have contracts with, or so they're at the end optimizing it on the traditional rails, right? So they also would rebalance the liquidity then with a Swift payment or something at the end, so that they can balance and settle the ledgers, and then again offering their product. So that works great. I think it's still a lot of overhead that is unnecessary in terms of liquidity management, right? And this whole ledger and not instant settlement of the assets, and also, of course, in terms of intermediaries and transparency also in the network and risks. I think it can't compete with the automation of that on blockchain, right? Because if I'm a crypto OG now and have used it like a lot of times, and also sending stable coins around now. So I mean, I'm not saying this is a standard user, but let's say I did that all the time, and then always when I think about my money in my bank application, right? So I see my balance there, and I think, okay, like how many people actually have access to that right now? Right? It's like there is some probably, I don't know, 10 sys admins and the bank and the head of the bank, some, I don't know. So there's just too many people there, and you need to protect that also, right? So of course that's not just concerning for me, but it's also concerning for the bank, because they have to make sure no one is hacking the system, or there's no internal attack on that account or some other stuff. So it's just, I think, huge overheads that can be automated in the traditional system. And I think we see also now some movements that actually also banks are using blockchain technology somewhere in the back end, right, to also optimize on that.
Right. Yeah, it does sort of feel like they're patching up like a not ideal system. It's like you have like the rails of a steam train, and they're trying to like fix the rails a bit instead of just putting next to it like the ice train or whatever in Germany, which goes much faster and much more efficiently or whatever.
Yes.
I think with Wise, the system that I remember was, I think you basically transfer the money in the country you're in, for example, to their account, the local account. And I believe, like you said, they hold liquidity in the destination country on maybe their own account, and then they send from there to you and take some fees or whatever in between.
Exactly. Yeah. So that's, I think, how they started, and that's still a big thing of their liquidity management, and also eliminating some of the intermediaries there. So that's how they work. And next step would be to like skip even the rebalancing part and just send it over to the country directly, right? And so that's a big thing, let's say, for them to change, because it will change the whole setup. Like, I don't know, the whole systems they have in place. Also, the compliance needs to be revamped completely. So I'm expecting new players to take up this disruption probably there. And I also believe that the disruption, I mean, not everyone is transferring with Wise.com today, right? So there is still people trusting their bank. And I think more than, 80, 90% of these B2B cross-border payments are just being done with the bank, right, with a
Yeah.
local bank. So the worst method possible, the most expensive one, right, still has
Yeah.
a huge market share. So there is a lot like to be disrupted still on that
Yeah.
market. A lot of fees are being paid to banks still. So
Yeah.
yeah, and that's why I also think crypto will not just like now come and gain 100% of the market share. I think there will be some people, like there will be some of the 90% might switch directly, right? Some will still go through a disruptor in the traditional finance world. So
Mm.
at the end, we will see a healthy competition where everyone can play out their advantages, right? Because for some use cases, you might need to trust someone there. You might want a custodian on the amount of money that you're transferring, or you want to have someone you can
Yeah.
later like go to court with the money is gone or something, right? And then there are some use cases where you can take that risk, sending $100 around, sending 10,000, like for freelancers or for other titles. They can maybe take the risk, right? Working in a self-custodial or non-custodial way with their money and are better off this way. So I think we will see a very healthy competition coming in, not only innovating on the chain side, but also probably the traditional finance and then the merge of both also, right?
Yeah. You mentioned that banks were sort of skeptical when you were kind of reaching out and things like that, and that is changing a bit. I remembered this story. I don't know if you had heard it as well. I think it's a major Australian bank which issued its own stablecoin. I believe to settle cross-border payments. Actually, I think it
Yeah.
was something like the U.S. changed the rules around it, and you had to settle within 2 days or something for cross-border payments that
Oh,
arrive in the
wow.
US. And the Australians, they were like, we literally cannot do this technically.
Yeah.
And I believe that informed that decision to take parts of this on chain to settle more quickly.
Yes. Also, Visa accepts like merchant settlements in stablecoins already, right? So you already see like that it's easier. It's an easier system, and it is adopted in some places. But going back to the skepticism, there are like very nice stories that also like we had ourselves there. I mean, just imagine 2014 a company named Satoshi Pay in Germany and
Yeah.
UK wanted to have a bank account, right? So it's just impossible, right? So only with like
Wow.
big convincing and talks and direct connections and contacts to some board members and we could get some bank account
Yeah.
running just to pay like normal fees, taxes, right? To be able to operate as a company.
Yeah.
So that was a big challenge. And yeah, then if it like at one point, I think also our Wise account somewhere in 2017 got closed down because of some regulation, right? So it's always blockchain was in the eyes of traditional finance. It was somewhere always near criminal organized crime
Yeah.
and drugs and so on. So it had a very bad image back then, and people were not making the difference. They didn't, let's say, put the effort in and looking. Okay, there are illegal players, but there are also legal players, and there's innovation there. So that took a while for traditional finance to understand and also maybe also put the effort there. So now it got better. Still difficult to get like normal banking accounts for crypto companies, I think. But yeah, situation improved a bit on
Right.
this, which is fine, I think. Yeah, it's also, I think, a defense mechanism from traditional finance, of course, a bit. So they
Of course. Yeah.
don't want to support that too much, also, unless they're profiting themselves from it. And now,
Right.
fortunately, there are also a lot of traditional finance players in the game, and enough lobbyism there for blockchain now. And I can
Yeah.
understand this, right? It's not bad will or something from those players because there was zero regulation on the topic. So how can you, as a bank and as a regulated
Mm.
entity, go to the regulator, explain them some flows, and say, yeah, we are doing this way tomorrow? It wasn't clear for them that a consensus algorithm or mining works really, like that this ledger is safe, right? I mean, how
Yeah.
do you prove that as a bank? So there was a lot of stuff missing, and unfortunately, that was put in place more and more, and then we're at the stage now where also the user can benefit from it, because now also financial institutions are allowed to do more things with crypto.
Yeah. Try explaining to your auditor. Yeah, that's just the Shiba Pups Obama Sonic Inu coin that was transferred to us, and we swapped it to USD. It's all good. It's all
yeah, exactly. It's yeah. I mean, the accounting actually never was a problem in that part. It was just like seen as some currency or good, right? And in the balance sheet. So that was like, we heard this so much. Like, how do we deal with this accounting? But it was like, wasn't the problem from the beginning. I mean, you can just handle it with like different currencies or whatever you have as a company, right? But yeah, but banks understanding it, and banks actually, let's say, trying to talk to them about production projects, like that was a completely different thing. And also, as I said, because of the unsure regulation, or let's say the no regulation at this point, like no rules out, no guidelines out for them, it was also understandable that they just could not adopt it, right? They were not able to adopt this.
Right.
Yeah. Still are. I
probably.
mean, the regulatory environment is still not clarified. It's still the situation right now, right? So, and Europe got a bit better with MiCA, but in other jurisdictions, I think it's still a wild west in some of the jurisdictions.
Right. What's your opinion on this? I know we're getting a bit off topic, and we're still gonna dive into Pendulum here, but in terms of regulatory environment, because it does feel like, and I've heard a lot of takes like that, it does feel like that the EU is quick to regulate new industries and technologies, but not very quick to foster that industry in the EU, in their own countries, so that we can benefit from these industries and be industry leaders, right? Like, if you look at Web 2, we've missed the train, and now there's Web 3, and there's regulation. I know there's AI, and I think there's immediately regulation, but there's no players here, right? And you are based in Germany, I think. So what's your opinion on the environment and the approach?
Yeah, I mean, like both sides, like let's say less rules, less guidance, more Wild West has some advantages. But if you, let's say, want to go and scale a business, then you need guidelines, you need rules, because you would face a risk in the Wild West that your business, what you're doing, is illegal from tomorrow, right? So just because the regulator just had a bad night, and the next morning they interpret the current laws against some cases or something, right? So and if there are no rules, then they can just do also what they want. Everyone can do what they want, and that's not really a nice environment to scale a business. So in general, I like that because I think it's an iterative process of getting the rules and the regulations in, seeing what it actually means in practical moments, right? When they enforce it, or what does that lead to, right? I think as in software development in general, I think such a new topic is hard to like initially get it right? So I like the approach that there is something thought through. I hope it's not too much, let's say, driven by traditional financial players want to protect something, so that it's more open to the actual innovation and automation that's possible with blockchain technology. And I think stablecoins, they got regulated. Let's see if this e-money institution license that you need to issue them, how this plays out now, right? There is a big date, 1st of July coming, where this needs to be implemented. And I think Circle still has a pending application for that, for their Euro C. So it's interesting also, like, okay, what are the players doing? How is this then enforced? What happens with the industry, and what use cases can you build on top of that? And and where maybe it restricts a bit too much or something. So this will
Yeah.
be more transparent in the next weeks and months. I think for, let's say, for me as a founder, it's a better situation to know some ruling than being dependent on some spontaneous
Yeah.
reactions in a unregulated environment. Let's say, if
Right.
like it's less risk. At least you can look at the risk and make your own opinion about it, right? How big it is,
Yeah.
better than if there would be no ruling or opinions on this. So it's a lot of guessing if there's no rules there, right? So,
Right.
and still there are a lot of players still also acting like big players, acting in some gray area right now with
Yeah.
crypto, and it's very much dependent on also, okay, how will this play out now in the future, in the enactment of these regulations, right? Will there be some amendments, or what is the legal aspect? Will there be now court rulings that interpret this differently or not? So
Yeah.
I'm very open actually to that, and we're always trying to put similar rules actually on us than that we see on in the traditional finance space. So these rulings and regulations are actually there to protect users, which is a nice objective. That's the ruling we're also following if there is no rule in place right now. So that's we have a path that is a little bit more sustainable than if we would try to let's say use some loopholes somewhere, right? That would then just being closed at the end.
Yeah. Yeah. Okay. Yeah. Yeah. Let's hope there's regulation serves innovators like you guys and doesn't create like bureaucracy and red tape, which it can sometimes. But yeah, and it doesn't cause like further migration sort of innovative projects abroad, right, to other places which are kind of establishing themselves as Web3 hubs. I don't know if it's like the UAE at this stage probably, and Hong Kong. I think UK is sort of trying it as well. And I mean, but like you said, as at the same time, I believe a lot of projects left or are leaving the US, but it is more for the reason that there was not enough clear guidelines, right? The SEC. So it's the
Exactly.
other end of the spectrum. Obviously, doesn't work either because that was just arbitrary ruling by what you call it, like bringing cases against companies instead of
Yes, so that's the full spectrum. I think we're kind of an in-between phase, right? Right now, there will probably be some defense mechanisms still from, let's say, the old, also traditional financial players playing out in some rulings and regulations until the disruption wins at the end. But what I'm very sure of is that, I mean, if you're technically understand how blockchain works and what it can do, then you also can see that it's just a superior, it's an automation of some things that are otherwise impossible or with super high manual or effort, right? So putting that trust level on, right? So I would rather than transfer, let's say, $1 billion through a blockchain transaction than actually in a traditional financial institution, if you see it through, right, and if it's properly decentralized and so on. It's just a superior system for that you would trust more. You trust more the machine than humans probably at one point if the software is audited and so on. So I think it's a merge. So I did say that also before. I think we will see new rules coming up because, let's say, the regulations in the traditional finance, they have to tell you, like, okay, what's your ID entrance system in the building? Like, how do you secure your building, where your servers are, and do you train your employees regularly and so on, right? There's a lot of these rulings that try to prevent attackers from getting your money, right, or our money, and And then in the new world, let's say in the DeFi world, there needs to be rulings that software needs to be audited by a proper company, right? So that's more being disrupted by the software. Then you can solve this with software, like lots of this stuff, right? But then, of course, the software also needs to be properly audited, needs to be secure, and so on. And then regulators need to make sure that this is the case, right? So I think this learning and also the upskilling there on the regulator side will take a while, and hopefully, it goes faster than today. I mean, hopefully, it accelerates a bit.
Right. Hey there, just a quick message. If you're watching this and you're enjoying it, please make sure to tell a friend that might also like it, because we don't run any ads on this podcast, and that helps us out a lot to keep doing this. Thank you. Well, let's get to Pendulum.
Yes, sure.
So how are you guys bridging? How are you guys bringing things on chain? What's your concept, and how does that improve things?
So we're connecting directly fiat to the fiat networks out there through stablecoins. That's, I think, a major building block that we're using. We learned that from the Stellar network, actually, and that's also the reason why we built initially a bridge to Stellar to connect actually to all these fiat gateways. So what's happening there is that a institution, a fintech, or some financial company, like financial institution, is issuing a stablecoin in a country like Brazil or Mexico or Canada or Australia, and issuing a AUD token or BRL token or MXP token, so a local currency stablecoin token that's fiat backed, like the USDC or USDT or a EURC if you want, right? And with that stablecoin, they always like redeem this if it's being sent to them, and then they issue or release the fiat reserves into the banking system, right? So that you can use the stablecoin actually as a connection and transmitter to and connection to the fiat system. That's what we're leveraging with the Stellar bridge. And what's possible then is that you can exchange these currencies, like these fiat currencies, not only on some centralized exchange or with a bank, like in the traditional FX world, but you can exchange these fiat currencies actually on a DEX, right? These stable coins. So what we then added is a novel design DEX that's specialized on these stablecoin swaps, and there we can offer the user actually very low, like 1-digit slippage and fees for this FX that's happening there between currencies. So if you want to exchange US dollars to Brazilian real, or if you want to exchange to Mexican pesos or to Australian dollar, you only pay like a very small part of what you usually pay if you send it through your bank or some other platform. So it's really, it's really nice to see. And that was also rolled out successfully by us this year. And this is the basic, let's say, infrastructure we have built. And we're building several use cases and dApps now on top of that. The first one that we identified to be the most promising one in terms of user traction is an off-ramping, like a ramping use case where users are already on crypto, because well, we talked about this earlier. It's hard to bring people on crypto, right? Having all the crypto onboarding with them, explaining them what crypto is. And so that's why we say, okay, the easier to market here is that we're targeting users that are getting paid today in USD stablecoins, for example, or USDC, USDT, or are transacting with USDT stablecoins. And then they need to pay something in their country, right? And for this, they would need to off-ramp this in the banking system, and that goes instantly then through Pendulum using the Stellar bridge also, so we can exchange and swap any asset on Polkadot that is in this DEX, right? We can swap that directly into the fiat system of the country if you want, and that's a pretty nice solution, because the alternative would be you have to go to a centralized exchange who's usually then working with fiat partners in the backend, right? You have to do a trade there. It's an old order book trade, so you don't know the rate too much, right? You have some
Yeah.
slippage there, and it's also a big trading desk you're confronted with usually if you trade on centralized exchanges. And if you don't want that, then you work usually with these big rampers like MoonPay or Transact, right? And they
Right.
usually charge you like 2 or 3% fee, and then some hidden fee in the exchange rate and so on. So it's not too transparent, which
Right.
is changed by us bringing that actually on chain, right? So bringing this
Mm.
fiat currency and fiat connection, like more of this journey on chain, right? And then only
Right.
having actually a one-to-one stablecoin exchange. Let's say if you end up with 100 real or 100 Australian dollars, then you will also have these 100 Australian dollars in your bank account, right? So it's a one-to-one connection at the end when it comes to the redeeming of the stablecoin and issuing it in the fiat system, which
Right.
goes mostly instantly. So we have a prototype live in Europe also, so you can instantly off ramp in Europe. And the prototype also works for Brazil. We tried this just recently and tested this successfully. And this is further being rolled out now as a separate DApp on top of Pendulum.
All right. Can you run me through the process then? Let's say I got USDT on Ethereum,
Yes.
and I would like to off ramp through you guys to Euro, um, in Germany or
Yes.
something.
So it's a very nice example because we, of course, started having the technology on Polkadot, right? We started with the Polkadot off-ramp, but we're
Yeah.
expanding now actually to Ethereum layer 2 networks, also Ethereum networks. We chose Polkadot also because of this interoperability and the objective also for Polkadot to connect to all other blockchains also, right? There is Hyperbridge coming and
Yeah.
Snowbridge. So the Ethereum networks will be connected very deeply within the protocol, right? So that's pretty
Yeah.
nice.
It's
And
exciting. Yeah.
so the flow would be currently we would use bridges actually for that are
Mm-hmm.
already currently live. We're thinking of the Accelerator network there. We're prototyping this right now. So we would bridge your USDT over to Polkadot Pendulum right now, then
Mm-hmm.
having this exchanged on the DAX and exchange it to EuroC tokens. And these EuroC tokens would actually go through Spacewalk. That's the name of the Stellar bridge, and
Mm-hmm.
being transferred through Stellar into the partner in Europe who's redeeming those EuroCs and issuing the euros in the bank account.
Mm.
This journey takes, let's say, without the Ethereum part, it takes about a minute today, or
All right.
like 45 seconds or something. So my test's really nice to see. You click, you want to off ramp your EuroCs, and then they're actually appearing like some seconds, like some moments later in your bank account. So that's
Right.
live and working with the prototype. And having then the Ethereum part there, we initially would use current bridges, and that comes with a delay in time, but not so much. We're talking in another minute here, I think, from
Mm.
Polygon, for example, for
Yeah.
that journey. And also, the fees are okay for that journey. So we would still be able to offer this for, I think, 50 basis points or something is the goal there. And it could be possible even less, right? And we expect the bridging costs, so the costs of the interoperability with more networks actually going further down, right? So there are new protocols, omni-chain protocols coming up that are supporting this whole connecting the networks together, right? All the blockchains. And that's why we say, okay, we're already thinking in an omni-chain world here, and are just connecting the partners and the dots and the
Yeah.
different platforms together. We are open also, of course, to do shortcuts on the route if it's more profitable for the user, right? So if the user
Right.
saves some time and money, then we can also route the user another way. But initially, it will be exactly that route as I described.
Right. I'm just thinking if the solutions I know right now, if I'd want to off ramp my crypto to fiat and receive it in my bank account, it's not that easy, right? Like I'd probably go through an exchange, where I have an
Yes.
account, and it might take some time. Also, another question is, I'm KYC'd probably at the exchange, and how does it work for you guys regulation wise? Can you just use
Yes. So
Pendulum and then receive the euro in my bank account, or
yeah, that's an advanced solution, let's say. If Pendulum like comes into place for that. So we're also having, let's say, infrastructure for that topic on our roadmap, but not yet in place. So currently this being taken care of the partner who actually issues the stable coins and also redeems them. So they would KYC the user. That also only needs to happen once, right? And then you can off ramp directly through that fiat gateway, right? So
right?
you're saving the whole journey and trading experience on a centralized exchange usually, and also the delays coming with that, because also I think the centralized exchange usually, if they then issue a fiat transfer, that usually also takes a while. Like it's not completely instant on that side. So yes, compliance being taken care of these stablecoin issuers right now that we're connecting with these stablecoin links. And we, of course, had in mind, like very visionary, like since 2014 already, but we learned that for some things you have, like, it takes a while to solve this complexity. So of course, it can be, in an ideal world, you do one KYC, right, with a decentralized identity provider, for example, using an infrastructure of Guild, for example, also on Polkadot, or also any other that is then trusted and can be shared throughout the stablecoin issuer network. So that's a plan.
Interesting.
We don't see like this currently as a blocker, and also it needs some more convincing and some more initial initial usage until we talk about these optimizations. But it's definitely an optimization worth doing at one point, so that the user can save the cost of another KYC, right? I mean, in terms of time and holding the passport again in the camera and so on. So, of course, that's friction we can still also reduce, right? And it's, again, an innovation that comes from Web3. So it's much more difficult also to do this in the traditional financial world also, right? You have to do contracts with all your partners and then share that.
Yeah.
That's possible. I mean, it's easier if you're a regulated entity, if you have licenses, you can trust each other a little. It's a little different trusting than international companies again. So it is still very complicated. But then it also, let's say, if it's easier then for the user and the UX, it's also more expensive then again for the user, right? So it's as I said, there is for every user, there's probably an ideal market and technology to use, right? So, and if a user can do this a self-custodial way, saving 1% of the fees, $100 on 10,000 or something, then it could make sense, right, for those users.
Yeah. So what is life at the moment? What if I'm someone who's trying to make a cross-border payment, or I want to off-ramp some crypto? What could I do right now with Pendulum?
So it's still in the prototype. So you could use our prototype to off-ramp URCs right now, right? That's shared also in one of the recent governance proposals, also on our Twitter. We'll roll this out as a product prototype, I think, in the next week. So stay tuned for that. And it's really possible on an official interface to do that also. But you can do this right now. We will roll also out this special stablecoin DEX. So initially with currency pairs for Brazil, Australian dollar, and euro also. So you could, from a USDT or USDC, off-ramp to these regions, to the European region, to Brazil, also to Australia, which is already quite nice. Our further markets are in the LATAM area, so we will add more LATAM markets because that's where we see a lot of potential users and of our target audience. There are a lot of freelancers also working there. There's a big community. It's also already very crypto friendly. And this will be added soon. So if you want to see your instant cryptos arriving on your European bank account, for example, you can do this already now with the prototype. And stay tuned for the big launch of the product than having this in full-fledged user experience, right? So the
right.
UI
So
is still prototype UI right now.
okay, I got you. So you
Yeah.
can do it, but the user interface is still prototype. And
Yes.
okay. Which website perhaps, and we can put that in the show notes as well.
So you can reach the prototype on. I can maybe send you the link later. As it is a prototype, it is not an easy URL. It's like a prototype link. I can send it later to you. So maybe you can add it to the podcast somewhere.
Yeah, we'll put that in the show notes, so you'll find it there. Right. One more question I had in terms of the liquidity on that DEX. Just where is that coming from? Are you yourself providing liquidity so that someone can swap into Euro C or something, or is that like permissionless? Other people are doing it and holding LP tokens, but then I'd be curious because some of these coins just have are less, like I saw an example about Tanzanian dollar or something.
Yes,
and it's a
Tanzanian
question,
shilling,
yeah, shilling. It's the question who would want to hold that or provide that liquidity.
Yes. So first, it's permissionless, so everyone can provide liquidity. We will, of course, talk to partners, making sure that there is enough initial liquidity to offer the rates we want to offer to the users. So we'll make sure that there is, let's say, enough liquidity for the product to work. But you can also join earning your own APR on that, right? So you can earn a yield on this liquidity provision. And I think that's also how we balance the risk. So if it's more expensive, let's say, to hold Tanzanian shilling, for example, or other assets of other countries, maybe you don't want to have exposure too much for Brazilian real also.
Yeah, exactly.
And then the APR, like the liquidity pool, will be smaller, probably still enough to offer a 1-digit basis point slippage, because that's what the DEX is specialized for. So it offers a deep liquidity because it works with an external oracle, actually, which adjusts the price curve. So it also can work with lower liquidity amounts, still offering the nice rate, right? So you can go there, and if the liquidity pool gets smaller, you earn like a higher yield on that. So it's classic, let's say, liquidity management on that risk and profit side of things. Also, there is one advantage, I think, which makes these currency pools more attractive. It's a single-sided liquidity provision, so that's been taken care of. So you don't have an additional risk there. And we're talking to local partners. So there are these stablecoin issuers, of course, also, and there's a local market in Brazil. They already have exposure to Brazilian real, and for them, they can actually earn additional yield putting their real on chain, right? So it's for them, it's not an extra risk they take. Of course, they probably also want to hold some of the funds in US dollar, but for them, it's a lesser risk, let's say, to put other currencies or local currency and add them to the pool and earn some yield on that. Of course, we will incentivize also initially that liquidity, so that comes on top, but we are pretty confident that there is an organic yield actually being earned because the DEX works with, let's say, a lot of volume actually for that. So we're expecting a lot of throughput of a couple of transactions, right, for these ramps, right? Yeah. So it's a tool for the ramping, which can work with a lower liquidity in total, but then allowing a lot of like cheap and instant rampings, right? So it's also, that's one part. The second part is there is also a very attractive part of doing arbitrage then with this DEX, because it works with an external oracle that's actually linked into the traditional finance system. So you have a traditional financial system price on chain now with some liquidity. So to arbitrage maybe to other decentralized exchanges is one step closer now for you. So that could actually add an extra yield to the pools there. And again, is another reason making this liquidity less costly, right, for the project and for the users. So I think altogether, like the technology, the partners, and single-sided pools, and then also the concept of the DEX itself being there mainly for the ramping and use cases, right? For the fiat gateway use case, will attract enough liquidity to work and offer a nice yield on that one.
Right.
Yeah.
Yeah, I think it sounds like you guys have a moat for one, in terms of the technical integrations you have. I mean, you got the Pendulum parachain on Polkadot, and then the Spacewalk, was it Spacewalk bridge
That's the
with
bridge. Yes.
Stellar, right?
Yes,
But then
exactly.
also the whole, as usual, if you're trying to connect the real world to on chain, you have to build all these relationships and connections and integrate them to the stablecoin issuers and fiat systems and all that.
Yeah. Yes. I mean, that's a little bit decentralized in terms of the local partners that are issuing the coins, right, in these countries. So they know better the situations. They're well connected in these banking systems and networks. So that's where we happily don't take part in, all right, in this global, very different, depending on the jurisdiction, all the compliance challenges that you have there. But yeah, I think what we bring in is actual business case on this, which makes sense, and I think that's also where we break through some things. Like, we're not only coming with the technical innovation and the infrastructure, but we are actually also targeting, because we are seeing, we've been in the space already for a while, and we've seen the demand also out there for certain products, and we're trying to really bring this on the road now. And for example, for the ramping to the Eurozone, the instant ramping right now, like there is Stellar involved, right? You heard all things. You just need to click and sign a transaction on the Polkadot side, for example. So you as a Polkadot user wouldn't be exposed to like being onboarded to different chains again and so on. So you're just initiating it on the Polkadot side, and the rest is automated until the money is in the account on your fiat bank account, right? And the same way we will automate things if you start from an Ethereum layer 2 or other chain, like from Polygon. So you sign this Polygon transaction, and our aim and objective is that the rest can be automated through smart contracts until it is in your bank account. So you're not getting additional friction into the product. So that's always our goal. And I think that's the only way we can scale users here.
Yeah, that sounds great. That's exactly what we need. Talking about all the complexity in cross-border payments and all that. That sounds, it sounds ripe for disruption. And your approach of one click is one that I like. I suppose the one with Polygon would probably, Axelar would maybe execute then the swap on your chain then, right? I think they have this kind of message sending thing.
Yeah, so I think, what we've seen also recently is that these smart wallets are coming up, right? So which just means that it's an abstraction. It's just, you're not sending money to an account that is only an account. Let's say a stupid account, but it's actually a smart contract, a smart account that can do things, right? That can react on certain things. So if you just deploy a smart contract on chain and configure it, then you can actually like do things with it, right? Do smart. It's this kind of programmable money that, like, this catchphrase that already like took off like 2 years ago or 1 year ago or something. It was like always revived, but it's exactly this kind of thing that helps actually to improve the UX, right? Smart wallets are using this right now. I think it was one of the big features also for projects to manage their funds from Gnosis Safe, right? The Safe application that had this already like very early on. So you can configure limits, right? And of course, multi-signature accounts. Like you can configure a lot of stuff, and you can also configure like if this money arrives, do this and that, right? So you can build your own if this then that application on chain. I mean, audited and safe actually, right? If you do it once, then and it's safe, and it's the best way of dealing with these challenges.
Yeah, Yeah, so many of these primitives already exist now. It's all about just combining them and putting them together, and making it user friendly. And so I'm really excited about what will be next for you guys. Perhaps once things have got going, then more, and you've been live, we can have you on again and see what you have to tell us.
Yes,
Yeah.
definitely. Happy to come back. There will be tons of progress in the next weeks. That's what I can assure you of.
I believe it. Definitely share it with us so we can update people on it. Yeah, I mean, thank you so much, Alex, for coming on the show. Anything else you want to
Thank you.
say?
All good. Do your own research always, I can say to users still. Hopefully, this can somehow be, I don't know, also taken away sometimes or being supported by better user interfaces or something, right? So that's what I hope
Right.
for, that people don't get scammed or something. But we are at the right technology for this, I would say, with DeFi.
Right. Great
Okay,
last words. Thank you,
thanks.
Alex.
Cheers.